Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club. Today we have Chad Griffiths with us. Chad is an industrial real estate pro, and I am super excited to have him on because we don't talk about industrial a lot. And so this is going to be a new topic for us. So Chad, thank you very much for hopping on.
Yeah, my pleasure. Thanks so much for having me on.
All right. And I gotta apologize to everybody who's listening. I do have I got bronchitis a few weeks ago, so I might have a cough here or there, but I'll try to keep them in. Speaking of,
right on cue.
AM. All right, Chad, I told you before we hopped on, we like to start with stories. Stories are always the meatiest part and the most interesting. So why don't you take us to yours? I'm sure you got a good one. Industrial is a very niche market. So tell us your story. How'd you get into real estate?
Yeah, it actually started when I was younger, and I bought and sold a few houses with some friends, and we got the itch to do more. And I really liked real estate. We weren't very successful at the time. We were just young kids, and we were using whatever money we had to try and get it to work, and we just couldn't profit off of it. But I still had the real estate itch, decided to get my license. I did a year of residential real estate and just didn't see a future for me being in that long term. So I reached out to a few friends, wanted to get into the commercial real estate space, got a offer at one of the brokerages in 2005. And I've actually been at that same company ever since. But I thought I'd be working in commercial real estate. I thought like the glamorous aspect, like an office tower or a shopping center.
Donald Trump kind of stuff.
Yeah, exactly. I wanted to be Donald Trump, maybe without the hair
Right,
and everything, all the other baggage that he has. But I was a fan of Donald Trump. I was thinking office skyscrapers. Our office so just happened to be primarily involved in industrial real estate. So it was almost by pure accident that I joined an office that was focused on industrial real estate. All the agents were working in that, so I just stumbled into it, and that was 2005. And so fast forward 17 years, partner at the firm now, and then in 2014 I also started investing in it myself. So with a partner, we bought a single industrial condo for about $400,000, and then we've pretty much added a property every year since. We closed on one in January, was 6 months ago, which was about $3.5 million. So we've scaled up our portfolio from that first one of that kind of $400,000 one to now we've got about a portfolio of about 18 million. And we've got a few partners in there, and obviously a lot of debt on that as well. But kind of our goal and our vision is just keep adding properties, one a year if we can do it.
Yeah, man, one step at a time. That's the best way to do real estate. I love it. So I got a few questions. I mean, it sounds like you first got started with your friends way back when, and you just said like how'd you guys get started in the first place? It sounds like you just were going out there. Were you doing wholesaling, or were you guys brokers at that point? Or
no, we would look for really cheap houses, so almost flipping like inner city houses, and try to flip them, or if we could, we'd try to put tenants in there, hope that you can, I think the traditional goal of a real estate investors, hopefully you can get some appreciation, hopefully you can get some pay down, hopefully you can get some cash flow. And we failed at all three of those. So it was just, we didn't come out, we didn't lose money, but we put in a ton of effort trying to flip these. And at the end of the day, if you have nothing to show for it, that's a lot of work that can go into it. So yeah, it was, I saw the opportunity, but when we were all in our early 20s and we were using all the money that we had and all the time that we had to try and put into it. And it's just, we couldn't make heads or tails of it. So it was a learning experience, but ultimately a failure.
That is a very familiar story. One of the first flips that I did was with a buddy of mine. And this was literally one of the first deals that I had. And we did most of the work. Like, we laid tile, we did the demo, we did all this stuff. We shouldn't have been doing it because we were not good contractors, but we did all the work and we worked on it for, I think, took 9 months to do this flip. And we ended up each with $16,000. And after that much work, we were just like, fuck this. This is horrible. We do not want to do this again. But,
that's the fact that you made 16 grand though, that we would have been ecstatic if we made 16 grand.
I love it. Right on. So you started with friends, but it wasn't your cup of tea. You tried brokerage. You didn't like resi. Why didn't you like being a residential broker?
There's people that do enjoy it, and so I don't want to denigrate it and make it seem like it's not a great industry. I think that there's some awesome residential agents out there. I just hated the evenings and weekends and always being at somebody's beck and call. And when I was younger, I was like, I can do this for sure, but I just start trying to extrapolate out the future trajectory and see, well, you're gonna have kids and you're gonna have a family and you're gonna want to have your evenings back. And I didn't see a path forward where I'd be happy in that career for the long term. Whereas some of the people that I knew in commercial real estate, they're working mostly business hours and they're not at having to drop everything to go do a tour at 9 o'clock at night. And just that sexy element too of it, right? And again, this was before industrial, which is like a pretty opposite of like a sexy trophy
it's the unsexy ones that are the best in my opinion.
and I'm very grateful that I found my way into that, but that was the main reason, is just I didn't want to be doing those evenings and weekends and on everybody. You have to drop everything if somebody calls and wants to look at a house because it might be sold the next day. So that I didn't want to do that long term.
Yeah, no, that makes sense to me. You mentioned industrial condo. What is that? That is a new term for me.
Yeah, and terminology will vary, but it's no different than like an apartment condo or a building. For the easiest way of putting it, and I'm sure this isn't in every market, it could be an apartment building where they're all just individually titled units in there. Like I've heard terms like strata and like a condo, like for residential, but it'd be a full building where each individual owner owns just their unit, and then they might have like a unit factor in there where they own a portion of all the common area space. Exact same concept exists in other asset classes, industrial being one, where the condo that we bought, it was part of a larger building. It's about 40,000 square feet total, and we just owned the legal unit that was in there. It was about 2,000 square feet, but that provided us the ability to get into a property, an industrial property, which we really wanted to dip our toe into for a number of reasons. We wanted to show that we could properly manage an asset, start building your portfolio, getting your name out there. So we wanted to do that. And what a lot of people think with industrial, and this has just been common that I've noticed talking to a number of people over the years, is that they think industrial means that you're spending $10 million on a big warehouse that's leased to FedEx. And while that's definitely an opportunity for people, there's also all the way down to like a $400,000 condo like we bought for our first property. So I that's one thing that I like dispelling, is that notion that industrial has to be these big assets. You can buy smaller and inexpensive ones just as easy.
Yeah, for sure. Well, let's take that cue. Let's dive deeper into industrial. This is, it's an asset class that I don't know a ton about. It has similarities with self-storage, which is my focus, but it's obviously not even the same. So why don't you just talk industrial to me? What's the first question we can get into? I guess what I like to learn about first when I hear about new assets is just what are the pros of the asset class? Like why
why would you sell an industrial, how would you sell an industrial property to me as an
Well,
investor?
I think the first thing that I would say is that I wouldn't necessarily try to sell anyone on it, because I think that there are a lot of disadvantages with it, and that probably sounds contrary for me coming on talking about industrial real estate, essentially saying that it should scare people. But I think that there that's an inherent obstacle to investing in industrial real estate, is the fact that a lot of people don't want to do it. Either they don't know enough about it, or they're not confident in it, or they think that there's too much risk that comes with it. There's a lot less people that want to do it. And I think that that's a good thing, because I kind of subscribe to Warren Buffett's theory on investing is never lose money. Well, if you don't know what you're doing in the industrial space, you run the high risk of losing money. And that was no different than when we were investing in residential. We just didn't know it well enough and we lost money on it. But if somebody was committed to looking at industrial, and they want, either they wanted to diversify, or they saw it as an asset class that had a long runway ahead of it, which I believe it does, there are a few reasons that I think industrial can make a lot of sense. And it's why I've put all my eggs in the basket. Is the first is that for the most part, your leases are going to be a lot longer than what you'd see in like self-storage or residential.
You're talking like
Self-storage,
5-year, 10-year leases.
yeah, like it's not uncommon to see a 5, 10, 15-year lease. So if just from the standpoint of having that confidence that you're going to have a tenant in there, it's not a resident, it's going to be a business, so you can look under the hood to see how strong that business is, what the likelihood of them being able to support their lease payments for the foreseeable future, and you don't have that chronic turnover. With that also comes a lot of management upside. And just from the standpoint of being able to scale, I think industrial affords an investor much more ability to scale easily. And an example is the one property that we bought 2 years ago. It's a $3 million property that has a Fortune 1000 tenant in it. It's a single tenant. And if you were to spend, well, you're in Seattle, so your market's pretty crazy, but let's say an average multifamily building, if you're to spend 3 million, you'd get what, 15, 20 tenants in there, give or take, just using kind of a round number. And the management required to manage 15 to 20 residential tenants is considerably more than managing one industrial tenant, which takes care of everything anyways. I haven't even been to that property in the past over a year. I haven't even been at that property, because they take care of anything that comes up. And if something comes up that they can't take care of, we just have a maintenance guy go out to do it. So that's a very easy property to manage. And I can add 5 of those properties without having to take on a considerable amount of property management and operations, and just like to me, having to manage 100 residential tenants versus managing 5 to 10 industrial tenants that turn over once every 5 years versus those residential that turn over every year, that I think that just the ability to scale is very appealing. Those would be probably the main reasons that I would say, is just ease of management. You got longer term tenants. Even related in that, I guess, would just and an important aside is just how most leases are structured. So most commercial and industrial specifically are structured what's called triple net. And that means that tenants will pay one amount to the landlord, usually called the base rent or the net rent, plus the tenants pay for all the operating level expenses of the building, including any increases. So the lease will be structured, tenant pays one amount as their base rent, then they also pay either the full amount if it's a single tenant building, or they pay their proportionate share of all the operating level expenses, such as property taxes, building insurance, common
Utilities, blah, blah, blah.
all of that. So the tenants pay that, but it also is written right in the lease that they pay for any increases in those expenses. So I think that that's really an important distinction between like a residential lease, which is probably structured as a gross lease. So they might pay utilities over and above it, but if they're paying $1,000 a month, that includes the property owner's property taxes, the insurance, the condo fees. That's going to include all of that. Whereas in commercial, they pay all of that separate. So it helps from having that amount be eroded by increases, and property taxes always seem to be going up. We're in an inflationary environment. If you only have a gross lease right now, all these increases are eroding your profit essentially. Whereas in a commercial and industrial lease, those increases, while they're ultimately borne by the tenant, and I'm sure that they complain about it, that doesn't affect the amount of base rent that I get as an investor. So all that being said, I still do want to frame that by saying it is very appealing, but I think I always like putting it on a pendulum. I think that there's a lot of upside potential for industrial, but when that pendulum can swing far on the upside, that also means it can swing far on the downside. And the last thing I'd want to do is paint this as being a very rosy picture where I do believe it's a great opportunity. It also does come with a corresponding amount of risk. And I think any new investor should just be very careful on how they take on that risk.
Yep. And the risk, I mean, in my mind, the risk being, especially for the larger facilities, the tenant base is a lot smaller. You're talking multifamily. You can go to any family out there can rent this. When you're talking, 100,000 square feet of industrial space, there are fewer businesses out there that are, have the economy to actually rent that from you. And so smaller tenant base, when your one tenant leaves, you're shit out of luck. You're not getting any income. And now you've got to scrape, rush to fill that. Does that sound like what the risk kind of involves there?
Absolutely. And I could even give a specific example is imagine somebody goes and buys a property in a warehouse property. Say they just spend $5 million on it and they've got a tenant in there for 5 years. And after that tenant, 5 years comes up, let's say that tenant decides they're not going to renew. Well, what is the market for that property? Perhaps it was specifically built for that company that was in there, and it's going to require a significant amount of money to retrofit it or to fix some of the problems that it might have to get that next tenant in there. And like you said, you now just lost 100% of your income. And property, by its very nature, is valued as some function of the rent that's coming in there. So if you have to now perhaps lease it for less than the previous tenant was paying, now the value of your property has just gone down from the sole reason that multiple of what the income is has gone down as well. So there's huge risk, and I've seen very smart people being involved in industrial real estate where that scenario has happened, and they've had to watch a lot of money go away just for that exact same reason. They had a tenant in there. The tenant left for whatever reason. They didn't renew, or they went perhaps they went bankrupt. Any number of things can cause a tenant to leave a building. And if you don't know what the market is for that building for the next tenant, then a lot of money can evaporate very quickly.
Yeah, and especially I bet it's very market dependent, because there are markets that just turn around. In 10 years, that's a long time. A market, the economy of a specific market could turn around completely within a 10-year period. Say like an Amazon comes in and now they need more warehouse, or an Amazon leaves and now they need less warehouse space. So yeah, it makes sense. 10 years, the lease being that long could definitely be a detriment and a benefit, depending on how you look at it.
Yeah, and that's a great way of describing it. I think that as in real estate investors, we have to be optimistic to some extent. Otherwise, we just wouldn't get into deals. Like I think that there's always reasons to talk yourself out of doing a deal. Like right now, we could point to probably 5 different things happening in the world that we could say, okay, well, we're just not going to proceed because of these reasons. So I think as a real estate investor, we have to be natural optimists and just say, well, if all this happens, then this is going to be a great project. And that's good. Like I think that that's what causes us to take action. But that also needs to be balanced by saying, well, what happens if everything goes wrong? Then what? And if you're comfortable with that risk reward situation, then I think industrial real estate is an awesome one. But there's a lot of investors that just want to go and earn a 12 or a 15% return annualized over a certain period of time. And industrial can certainly do that, but it can also go the other way, probably more so than other asset classes like multifamily, which, like you said, it's if you have a multifamily property, you're going to find tenants for it. Provided that the economy or the market as a whole isn't shit, then you're going to find tenants for it. Whereas that's not the same in industrial. So it's balancing that risk reward.
Yep, that makes sense. Cool. Well, you sold me. I know there's risk, but I like the asset class. Let's talk a little bit about the future of industrial. I know there's been a lot of talk about there being a bright future for it in terms of their needing more space for the last mile warehouses and all that kind of stuff. So what do you see in terms of the future of industrial? What markets do you think are super strong for industrial?
It's interesting actually, because the past 2 years have been insane from the standpoint of how much demand there is for industrial space, and more specifically for warehouse space, a subsection of industrial. And that's driven largely by the pandemic that we went through, where stores were physically
everybody
closed,
buying stuff on
everybody's
Amazon.
buying on. And Amazon took on a considerable amount of space, and not just Amazon, but all retailers, as they're trying to control their supply chain. Third-party logistics took on a ton of space. It's gone to the point actually that some ultra hot markets, like Vancouver as an example, is sub 1%. As you go into LA and New York's other port cities, they're sub 2%. And when you get into a market that's sub 2%, when like really a good healthy market's probably somewhere
Are you
in that
talking,
5
and
to
you're
6.
talking cap rate, right? For sub
For vacancy rates, sorry.
vacancy. Gotcha.
Yeah,
Okay.
a sub.
I was gonna say
2%.
sub 1%. Jesus, who's buying that?
Well, you know what? That wouldn't actually surprise me in some of those markets either. Like it's irrational at how crazy it's gotten. Sorry, vacancy rates. So
Okay.
sub 2% vacancy rates for like these really hot markets, and even like inland markets, it's still sub 3-4%. So it's a really hot market. I suspect that we might see a little bit of a tapering off on that for just a number of reasons. That's like we could always point to all these risks where it could prohibit an investor from making a decision. I think all those factors are going to cool that market off a little bit, but it's still so hot and there's still so little inventory to meet the demand that it will take something cataclysmic to really derail it. So I still think that there's going to be a lot of demand for industrial real estate, as hopefully the market and the economy just stabilizes a bit. We don't have all these volatility factors in there, but there's a healthy amount of demand for it. I don't think e-commerce is going to change. I still think that it's going to continue eroding that market share of the money that's spent in retail. And just as the economy grows and population grows, we're going to need more storage space. So I'm still bullish long term on industrial. I don't know what happens in the next year or two with interest rates and inflation and wars and you name
all
it,
the things,
all those things. I don't know what happens in the next year or two, but I am still very bullish long term on industrial.
Perfect, man. That is good to hear. So we're nearing the end of our conversation point. So I do have to push us into the quick question round. Before we do that, though, for people who, you sold them, they want to get into industrial, what are the first few steps they should take, to take steps towards buying their first property?
Yeah, a few things I'd say. First is commit to learning everything you can about the industry. So just everything from the nuts and bolts to what tenants want in a warehouse space, to construction, architecture, engineering, everything you can learn about the asset, because it's not familiar to most of us. So you really have to start at like grade 1 on that. And then combine that with studying your local market. So drive industrial areas, read research reports that major brokerage companies or appraisal firms put out. Start really understanding cap rates, vacancy rates, who's in the market, what lease rates are, what the trends are. Start really engrossing yourself in that process of becoming an expert in industrial real estate on your local market. And then ideally find somebody that you can partner up with that has experience in that field. So if there's an investor in your market that's looking to do another project, perhaps you could be the capital, they could be the knowledge. I think if you combine all those things about committing to be an expert in that field, finding somebody that can help guide you through that process, I think you're significantly increasing your chances of success.
That is great advice, and I would definitely echo that. Find somebody who has done it before, partner up with them, and that is a recipe for success right there for sure. All right, well, that concludes it for us. We have gone through our 15-minute point period, so we need to jump into the quick question round. Are you ready?
Yeah, let's give her.
Let's do it. Starts with books or any form of education. Give me 2 recommendations, one for general life wisdom and one for real estate specific.
Yeah, the life wisdom, one that I'm reading right now is from Ray Dalio. It's so he's written a couple of books. His most recent one is New World Order, I believe.
Yep.
just talking about how U.S. North America as a whole is starting to lose its competitiveness, and we're under threat of even losing like superpower status. And I'm in Canada, but we still ride the coattails of what the U.S. is. So if the U.S. were to not be a superpower in the future, that would affect all of North America. And it just talked about how the process of how in history there's always these superpowers that rose in prominence, and then they fell off, and kind of gives a little bit of ideas on what we could be doing to prevent that. But I just found that to be a really fascinating book, and a real estate one that actually is top of mind right now. I recommended it to a friend of mine the other day, and I pulled it out. I haven't started rereading it. I've actually read it twice, so this would be the third time that I've reread it. It's called To Be or Not to Be Intimidated, written by a guy named Robert Ringer. And it's older. It's an older book, but it's a fascinating account of how this guy treated real estate. He flew around in private jets. Some of the proposals and presentations he put together are fascinating, and it's just a really interesting story that this guy tells. So I've read it twice for a reason. It's a really interesting tale. So those would be the two. One's new, one's old.
Perfect. I love it. To Be or Not to Be Intimidated. I will have to check that one out.
Yeah, it's a terrible title. I don't know.
Yeah, well, it's like advice. That the Dale Carnegie, the How to Win Friends, Influence People. I hate the title. The book is awesome.
I agree with you completely on that. That is a world-class book, but the title sucks.
Yeah.
So same with this one. Maybe that was a formula. Maybe they're like, let's come up with a really crappy title and it'll sell books.
There you go. All right. So To Be or Not to Be Intimidated, and then Ray Dalio's newest book about, I think you're right. I think it is the New World Order.
I think that's what it is. Yeah.
That's super interesting. I always, there are people in America who are just like, oh, America, we're number one. But I always, I'm really interested by like the Roman Empire collapse, because, your countries, they rise, they fall. It doesn't matter where you are in the pecking order. You can always go down. So I'm sure I will have to pick that book up and give it a read.
Yeah, it's a very good book.
That moves us to the next question. And this one is for your younger self. So if you could go to the Chad who was just doing those first few flips with your buddies back in your early 20s, go back to him, look him in the eye, give him one piece of advice moving forward.
Save money, save more money. I think that'd be the best thing I could say, is that money gives you a lot of power as a real estate investor, and you can always try to raise money from other investors and do like the syndicate model, but having more money on your own is so powerful, because you can front load a deal yourself and bring investors in later. You've got the ability to be more convincing. If you put your money in on a deal, that makes it a lot more appealing to other investors that you're physically invested in it. So that's what I would have said, is save more money. Don't spend that $100 at the bar trying to impress girls. Don't buy the newest car. Don't spend money on that. Save money. That's what I would say.
Yep. Yeah, I've never been a really big spender, but I am kicking myself. I'm at that point in my investing career where I'm kind of kicking myself for putting so much money into the deals that I've been doing. I wish I had raised more money, because it is so valuable to have that money in your bank account. Just to be able to show people, sellers, say, hey man, I got money. It's amazing how far that goes, just to be able to show a screenshot of a bank account to show them, you have the capital to close, and you don't have to raise it yourself.
Yeah, having money and a high credit score are the two most powerful things you can have as a real estate investor.
Yep. All right, and that moves us to the next question. This is an opportunity for you to brag a little bit, because we are all gifted with strengths. You are no exception. We are all put on this earth with something that we specifically can gift to the earth. And so what is your Superman strength? What are you exceptional at?
I would say I'm exceptional at embracing being weird and awkward. And that probably sounds weird and awkward just saying that, but I don't hold myself with this super high esteem or have this big ego. I have no problem walking into a business and just walking in cold and introducing myself. I have no problem doing an interview like this. In fact, I love doing these interviews because I just love talking to like-minded people. Whereas I think that that's an anomaly. A lot of people are really uncomfortable doing some of these things that put themselves in a position where they might embarrass themselves or come across as weird or awkward. I like lean into that weird or awkward stage where I can embarrass myself. And while that might seem strange in itself, I think that that's helped me a lot. Is that ability to take no or be rejected or risk being embarrassed and just brush it off. I think that in itself is kind of like a awkward superpower. I don't think anyone will make a movie about me. I don't think I'll be the next superhero. I don't think that'd make a good costume and screenplay. But yeah, that's what I'd say.
No, I love it. You're the first guest who's mentioned that, but I definitely see the value in that. Just being able to sit in those moments that are, uncomfortable and just say, "Hey, man, I don't care. I'm here. I'm showing up, and so let's do this."
Yep.
That moves us to the second to last question, and this is about I usually say the United States here, but you're in Canada, so I'm going to say the world. It's a big place. There's a lot of square miles out there to put your hard-earned money. So what is your favorite metro that's not your backyard? What metro are you most excited about?
I like Texas. I have actually looked at a few properties recently in Texas for a number of reasons. I think that they're going to have a lot of net immigration. An economy is so closely correlated with population growth. Yeah. So I think they're going to have a ton of population growth. I think there's some factors at play that we don't necessarily need to get into a whole lot, but there's a merger between CP and Kansas City Southern, big rail acquisition, which is going to be the first single line rail network connecting Canada, the US, and Mexico. And that's going to take a lot of traffic. Yeah, it's going to be a game changer. It's still with the Surface Transportation Board for approval, but the acquisition's technically already happened. But that's going to take a lot of that port traffic that's going to California and New York, and the super high warehouse prices. That's going to divert a lot of that traffic to southern ports. There's one in particular, Corpus Christi in Texas, which is kind of like a tourist town, but it's also a major port. That's going to be right on that main line. So I'm quite interested in Corpus Christi. That's one that's kind of a sleeper in my mind. Could be a hunch. Like there's any number of factors. The last thing I want to do is say go do Corpus Christi, because there's still a lot of things that have to happen with that merger. But that's one in particular. Corpus Christi is one I'm very interested in.
Cool, man. No, I've been bullish on Texas for a bit. Last year I bought 3 self-storage facilities out there, outside of Dallas and in Lubbock, and I'm a big fan. Texas is everything's looking good out there. All right, and that leads us to the very last question. You have given a lot of good advice on industrial. So first, I want to say thank you for hopping on and sharing everything with us. The last question, though, is I'm sure people want to reach out. So what is the best way for somebody to reach out and get in contact with you?
Yeah, I'm active on LinkedIn, and I have a YouTube channel. So I've got quite a few videos that I've done. As I mentioned to you before, we were chatting. I don't even mention what company I work for or what city I live in. I just really want it to be a standalone product where I'm trying to add value to people that want to learn more about it. So you can just, it's Chad Griffiths CRE is the channel name, or email is always great too. griffithscre@gmail.com. I always try to answer emails within a day or two, but depending on how busy I am, it might be stretched a little bit, but I always try to answer emails or connect on LinkedIn would all be great.
Cool. All right. I will put those links in the show notes. So if anybody wants to reach out to Chad, just click the little more in the description. It'll pop down the full description in there. You can find URLs, reach out and say hi to Chad. So that's it, Chad. Thank you again very much for hopping on. It's been a pleasure having you here and having this conversation.
Yeah. Thanks again so much, Gabe. We really appreciate being on here.
Absolutely. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.